Here are the crypto top headlines covered in this video. SEC doesn't want Ethereum to transform banking landscape, says Joseph Lubin. Next, 3 trends to think about before Bitcoin's bull run resumes. Also, Coinbase sees infinite interoperability potential with Ethereum and USDC. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, SEC doesn't want Ethereum to transform banking landscape, says Joseph Lubin. Ethereum co-founder Joseph Lubin says the SEC is engaging in strategic enforcement action instead of meaningful discourse with the cryptocurrency industry. Ethereum co-founder Joseph Lubin believes the United States Securities and Exchange Commission is intentionally hindering innovation which threatens the country's existing financial landscape. Speaking at FT Live's Crypto and Digital Asset Summit in London, Lubin unpacked Consensus's decision to sue the SEC after receiving a Wells notice from the U.S. securities regulator. The SEC appears to have reclassified Ether as a security without telling anybody that that's the case. They are going about a strategic series of enforcement actions rather than open discourse and clear rulemaking, Lubin said. The CEO of Consensus, which developed the MetaMask wallet, said the enforcement actions intend to create fear, uncertainty, and doubt for the cryptocurrency industry in an attempt to paralyze and force the company offshore. Lubin said the firm's counteraction against the SEC is aimed at getting more clarity from U.S. courts, considering that the Commodity Futures Trading Commission had previously classified Ether as a commodity. Timing is suspicious. The Consensus CEO also highlighted the upcoming deadline for the SEC to issue a decision over the approval of Ether spot exchange-traded funds as a driving force behind the regulator's renewed enforcement action against Ethereum. We believe that there's a flurry of activity designed to enable them to say that their action wasn't capricious in the very likely event that they deny the Ether spot ETFs, Lubin explained. Lubin said the SEC had noticed how much capital had flowed into the ecosystem following the approval of spot Bitcoin ETFs. I think they're concerned that so much attention and capital will flow to our ecosystem, considering it is improving enormously in terms of scalability and usability. Lubin also speculated that the prospect of the banking industry's customers moving assets into digital forms using decentralized finance constructs could scare many banks and other financial institutions. The SEC probably doesn't want to see a wave of innovation that will really transform the landscape, he said. Why Consensus needs to win the case. The importance of a positive outcome against the SEC could also have wide-reaching implications for the cryptocurrency and technology landscape in the United States. Lubin said the SEC's claims that Coinbase and MetaMask's wallets are acting as broker-dealers are setting a dangerous precedent. He added that the thought of a piece of software acting as a broker-dealer was a preposterous notion. We're at odds over whether we should register MetaMask as a broker-dealer. Should every MetaMask user have to register their wallet as a broker-dealer? It's chilling, Lubin added. The Consensus CEO concluded that the entire technology industry in the U.S. could be impacted by the actions of the securities regulator. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, 3 trends to think about before Bitcoin's bull run resumes. The market is down, but the bull run isn't over. When it resumes running upward, some things are going to run a little more than others. Cryptocurrency's next bull run has already begun. One of the most significant differences compared to past cycles lies in the type of new investors entering the market. Bitcoin exchange-traded funds effectively opened the door for wider participation by making it easier to get a piece of the action, and Ethereum ETFs are widely expected to arrive soon. Newcomers may have some difficulty understanding crypto, but there is a worthwhile framework to be considered in light of their first investments. Easy start, modest gains. Beginners often start by investing in the big names like Bitcoin and Ethereum. For the most part, you can invest in Bitcoin and wait at least 6 months before checking its price to see if it's grown enough to sell. But for those with only a few $1,000s to invest, investing in Bitcoin isn't going to make you a millionaire. The near to mid-term growth potential is 2 to 3 times its current value. Experienced players understand that they need to check the latest trends. If done right, investing in a dozen small projects could really pay off. Assets that proved popular in the previous bull run, like new Layer 1 protocols and lending platforms, might offer a chance to grow your investment by 5 to 10 times. However, risk and return are two sides of the same coin. How much is one willing to gain or lose in crypto really boils down to the time, resources, and energy one is ready to put into studying the market. That's where the beauty of crypto lies. For those willing to learn, it's perfectly accessible. 3 narratives to watch. There are 3 narratives that the average new user without any impressive experience behind him comprehend and qualifiedly believe. The key is to figure out the story behind each product. Innovation stands at the forefront of this space because people in crypto are innovative and constantly looking for something new. I see 3 such trends emerging. First is the marriage of artificial intelligence and blockchain technology. A large number of projects are now trying to innovate at the intersection of blockchain and AI. While it's not guaranteed that these efforts will have fruitful outcomes, the narrative itself is strong. This trend, riding the wave of both blockchain's potential and AI's cutting-edge advancements, could capture the imagination of investors and enthusiasts alike. I'm following RitualNet and Morpheus. The second trend delves into more fundamental aspects related to the tokenization of real assets or the tokenization of debt. In a traditional market, the debt market is larger than the stock market. Yet in the crypto realm, there is currently no debt market. Stablecoin can be considered its starting point, since companies issue stablecoin in exchange for real dollars and then themselves buy short-term U.S. bonds. However, the concept of corporate debt remains untouched with crypto. Therefore, everything related to debt tokenization has enormous potential. PV01 and Ondo Finance are 2 projects in this area. The third trend focuses on enhancing blockchain technology itself, improving its efficiency, increasing throughput, and lowering operational costs. It uses new tech like parallel Ethereum virtual machines, or EVMs, to process many things at once, speeding up transactions. Likewise, zero-knowledge, or ZK, proofs keep things private but simple, making the whole system work smoother and cost less. C and Monad are projects to watch in this area. But how can we use these narratives to delve into the product? Imagine an investor who studies a product. He is interested, maybe even excited about a project. Every time he encounters something incomprehensible in the document, he highlights it in red. Then he looks at the whole description and sees that there is too much red in the document. There is too much he does not understand about the product description. and he doesn't invest. This is a straightforward strategy. If an investment is too complex to understand, it might not be the right one. This approach emphasizes the need for clarity. So when you're thinking about investing in a trend, remember that the big funds have probably already made a move. If there is some kind of noticeable narrative, then they will most likely have already invested in it. This is a good reminder to stay informed, understanding that in the world of investment, it's the giants who often lead the game. Our next top headline, Coinbase sees infinite interoperability potential with Ethereum and USDC. Coinbase head of tokenization, Anthony Basile, described plans for its base network at Tokenize This 2024 in Miami. Coinbase is preparing for a future of 1 billion customers using decentralized applications on millions of blockchains safely and securely in a system integrating the Ethereum virtual machine, or EVM, and Circle's USD coin. Coinbase head of tokenization, Anthony Basile, speaking at Tokenize This 2024 in Miami, said Coinbase's Ethereum Layer 2 base blockchain will save time on Know Your Customer, or KYC, and anti-money laundering, or AML, with identity attestation through the Ethereum Attestation Service and Coinbase Verification, which creates a tag on the user's so-called smart wallet. Coinbase Verification is available after the customer has completed its KYC procedure. While that may not be sufficient in all cases, Basile said, we expect that eventually to evolve into something like a KYC reliance model, and it will start to form market structure that makes it a lot easier for a simpler KYC process. Already more than 300,000 wallets have been attested. To give those customers with wallets and verified identities Web3 access, Base will leverage the interoperability of EVM networks. The ecosystem will be supported by USDC. Coinbase took an equity stake in Circle in August. Right now, we're somewhere above $28 billion of total assets in Circle, Basile said. Coinbase also has the ability to mint USDC. When robust tokenized assets in different asset classes arise, it could become possible to trade assets for assets without going through the intermediate step of trading them for dollars. Basile said, I think we're a while away from that goal because we need regulatory structures to show up. We need products themselves to be designed with identity checks instantly, and there is a lot of market structure that still has to come. Crypto is the perfect embodiment of a liquid-free open market structure where you can design any amount of complexity into it and have assets trade with each other, don't have to be dollar pairs trade, Basile said. In the meantime, USDC provides a first step to developing that market structure. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.